that Forex transactions and Forex valuations are two different concepts. So we shall create 4 ledger accounts. We will call the first two Forex gain and Forex loss, and we'll call the next two valuation gain and valuation loss. So you can see clearly that we will have 4 ledger accounts now, Forex gain and Forex loss, and valuation gain and valuation loss. Now we will maintain rates for our foreign exchange. We will use the Japanese yen as our example. We will maintain rates between the Aussie dollar and the Japanese yen. Now what we will do is, for example, is, let's take for example, we maintain rates for the 1st of March 2014. We then maintain rates for the 15th of March 2014. So what we do now is we enter a vendor invoice for the 1st of March 2014 into the system, and we pay that invoice on the 15th of March 2014, and then we see whether there is a foreign exchange gain or a foreign exchange loss. So obviously we will maintain rates for both these dates. So that's how we will do our first example. Now this would be classified as foreign exchange transactions. Valuations would only evaluate the ledger accounts which are held in foreign exchange and are still open on the last calendar date of each month, or whenever the organization wants to evaluate their foreign exchange held ledger accounts each month. Now the ledger accounts would be all open on the last calendar date of the month. Take for example, we evaluate everything on the 28th of February 2014. Now obviously they may not all be due on the 28th of February 2014. They may only be open on the 28th of February 2014. So what foreign exchange valuation would do when we run that in SAP is it would assume as if we are paying everything on the 28th of February 2014, and if we do that, then how much valuation loss or valuation gain are we going to make? That's called valuation. And then it would reverse all the entries on the 1st of March 2014 to bring all the accounts back into their original state, which is they should all be open, because on the 28th of February 2014 they were not all due. The system just assumed as if they were due, and what would happen if we closed them on the 28th of February 2014? Where would we stand? Because there are monthly closings that happens in an organization to keep track of the profit and loss, and therefore if you have accounts held in foreign currencies, it is important you evaluate them, given the fact that their value will change as per the fluctuation between the currency pairs. So if you have held accounts in Singapore dollar, Hong Kong dollar, Japanese yen, and your home currency is the Australian dollar, you have to evaluate these accounts at the last calendar date of each month, or whichever way you want to evaluate, whichever is your cycle, to be able to precisely find out where you stand on that particular date. Organizations do that. It's very important. But then again, valuation would mean you would only valuate them assuming as if they were all closed on that particular day. And then what would have been the net gain or loss that would have hit your ledger? So when we do foreign exchange valuation, the valuation gain or the valuation loss account is updated, and not the forex gain or the forex loss. And then obviously this foreign exchange valuation is reversed on the next calendar date to bring back all the ledger accounts to their original state. So that's the concept. Hope you have understood the difference between transactions and valuations. So not only 4, we shall actually create 5 ledger accounts. The 5th one would be called valuation adjustment account. It will be a balance sheet account wherein it doesn't really matter where we put that in assets or we put that in liabilities. And it would keep track of the valuation loss and gain, the net effect of the valuation loss and gain. So that's how the valuation adjustment account will behave. When we are doing transactions, the valuation adjustment account will be kept under open item management. So when we are doing transactions, the valuation adjustment account will be kept under open item management. But when we are doing valuations, the valuation adjustment account will not be kept under open item management. This is important to understand. So we will initially create it under that doesn't really matter if we create it under assets or liabilities, but we will keep it under open item management. Once we are done with our foreign exchange transactions and we are running the foreign exchange valuation, we will remove that tick and save so that it's no longer under open item management. Now, because we will come back to the concepts of why we are doing that again, but just to start off the lecture, these are the basic concepts. So let's start by creating 5 different ledger accounts, primarily 4, and the 5th one is the valuation adjustment account. The 5th one would be a balance sheet account, while the first 4 would be income and expenses account. Let's create them, and then let's do some account determination with those 4, and then let's do some transactions, generate some reports, and see how the whole business process works in SAP for foreign exchange transactions and valuations. So now we get back to the system and we create the ledger accounts centrally and we proceed. So that's how the whole thing is going to work now. So this is our system. I have already opened FS00 for you guys. If I go back to easy access and I type FS00 and I hit the green tick, it brings me back here. Let me create 2 accounts under expenses. So yeah, 2 under expenses and 2 under income and 1 under either assets or liabilities. So let's now go back into the system and create our ledger accounts centrally. This is where we are, and we just expanded expenses. I'll again go back to easy access, and if I type here FS00 and hit the green tick, I come back here, I expand expenses, I copy purchase, and I give it a new number range 1040, and I hit the green tick. I call it Forex loss account, because Forex loss would be an expense for us. Forex loss account. Everything else remains the same. Control data, there is no change. Posting date is the sort key. Line item display is ticked, and field status variant is an expense item. So I guess that's about it. We save that. This one is saved. We copy Forex loss and give it a new range, let's say 1050, and hit enter and call it valuation loss account. Everything else remains the same. No change in control data, no change in field status variant, and we save this. We now expand income, copy sales, and create a Forex gain account. No changes in control data. Line item display is ticked, sort key is posting date, field status is income. We save this, and we copy Forex gain and give it a new number range 2040 and create a valuation gain account. And no change in control data. The third tab also remains what it is, and we save that. So we have created Forex loss, valuation loss, Forex gain, and valuation gain. Now in assets, take for example, or let's create it in liabilities. We copy loan in liabilities, give it a new number range. 4030 is the last loan account we created, so we will give it, let's say, 4040 and hit the green tick and call it valuation adjustment account. And call it valuation adjustment account. Now this one will be a bit different. It's a balance sheet type in liabilities. Control data says line item is ticked. Sort key is posting date. We will tick the option open item management. We will come back and untick it when we are about to run the foreign exchange valuation. But as long as we are doing transactions, let this be ticked. In the third tab, for field status variant, instead of liabilities, we will choose clearing account. And if I come back to the second tab and go back to the third tab again, I can see clearing account shows up here. Open item is ticked, line item is ticked, sort key is posting date, and valuation adjustment account as a balance sheet account in liabilities. I'll save that. So I've created basically Forex loss, valuation loss, Forex gain, valuation gain, and valuation adjustment account. So 5 ledger accounts I have created. 1040, 1050, 2030, 2040, and 4040. I'm going to open a new session and do account determination for these 5 different accounts that I just created. So in order to do that, I'll open my configuration screen, which is my implementation guide, IMG guide, and the T code to go into the IMG screen is SPRO. So SPRO, hit the green tick and then go into SAP reference IMG, and then choose the option financial accounting new, choose the option accounts receivable, accounts payable, choose the option business transactions, choose the option outgoing payments, choose the option outgoing payments global settings, outgoing payments global settings, the first one, and then choose the option define accounts for exchange rate differences. Define accounts for exchange rate differences. So if we go to additional information on the top and say display key for IMG activity, then we'll see a few T codes here. Some of them are not direct T codes, so it's important we only come to them through the path, and this is one of them. Define accounts for exchange rate differences. It's not a direct T code. So we choose the path. For that we click on the clock and we do our account determination for our chart of account MR88. It automatically picks up. We hit the green tick. And we click on new entries or F5 on the keyboard, and here we go. So we have to do now the account determination here. We will do it in two steps. We will first do it for accounts receivable and then we'll do it for accounts payable. So if we go back to our script, then we have already created these 4 accounts plus 1, which is the valuation adjustment account. So we now go back into the system and do our account determination for the accounts we just created, and we choose now first to begin with the GL account, accounts receivable. So see what I do. I click on the bubble here for GL account and I choose the green tick and I choose accounts receivable 3040. Currency type is the Japanese yen, and currency is the Japanese yen and type is the company code currency. I'm setting up for Japanese yen. You might have to do this for different currencies if you have different currencies with which you are dealing with. Now, why am I linking and doing all the account determination with receivables and payables? Because at the end of the day, I'm going to have foreign customers and vendors. So it's important I link the foreign exchange transactions and valuation accounts with receivables and payables. For the exchange rate loss and gain, I have already created my accounts. So I'm going to call it, I'm going to say for loss it will be Forex loss, which is this one, 1040. And for gain it will be Forex gain, which is this one, 2030. For valuation loss it will be valuation loss, which is this one. And for valuation gain, I click on the bubble, chart of accounts is already here. I click on the green tick and I choose valuation gain, which is 2040. For balance sheet adjustment, I click on the bubble. My chart of account is already here. I click on the green tick and I choose valuation adjustment account, which is under liabilities, 4040. So I have done my settings now. I save this and it saves it in the folder we have been using so far. So this is the only folder we have. I hit the green tick and the red X button. Now it automatically shows my folder, so I hit the green tick here and it says data was saved. So we will now go to next entry on the same screen, and for that we will hit this button or F8 on our keyboard, and we will choose now accounts payable. So we will again hit the green tick and double click on accounts payable. Currency would be the Japanese yen. Type would be company code currency. For exchange loss, we have forex loss. For gain, we have forex gain. So I hit the green tick. For valuation loss, we have valuation loss. I hit the green tick. And for valuation gain, I have valuation gain. I hit the green tick to search for all my accounts, and I see valuation gain here. And for balance sheet adjustment account, I hit the green tick. I have valuation adjustment account, which is under liabilities. So I double click on this and I save it. Data was saved. I go back to easy access and I'm done. Now this one where it displays my GL accounts, I'm going to close this session. So I'll be only left now with one session. So basic account determination I've done. I have to maintain my rates. I have to do a few more configuration steps before we are able to do foreign exchange transactions and valuations. At the same time, I have to create a vendor which is based in Japan. So I have to create a fresh new vendor which is using Japanese yen as its currency, and then do transactions with that vendor to show you how gain loss and valuation gain loss happens. So let's now go to the next step and do the rest of the configuration. So I'm going to delete these notes and we will start fresh.